The AI chip wars just got a brand new front line, and this time, the battlefield runs straight through Nvidia's most valuable territory. OpenAI, the company behind ChatGPT and arguably the most influential artificial intelligence lab on the planet, is partnering with semiconductor giant Broadcom to design and manufacture its very own custom AI chip. This isn't a rumor. This isn't a speculative roadmap buried in a quarterly earnings call. This is a deliberate, strategic pivot, and it raises a question that every serious investor needs to sit with right now. Is Nvidia's dominance finally starting to crack? Let's break down exactly what's happening here. OpenAI has been one of Nvidia's most significant customers, consuming enormous quantities of H100 and A100 GPU clusters to train and run its large language models. The compute costs have been staggering, reportedly in the billions of dollars annually. So when a company of OpenAI's scale decides to build its own silicon, the motivation is crystal clear. They want control, they want cost reduction, and they want performance optimized specifically for their own workloads rather than relying on a general-purpose GPU architecture. Broadcom is the critical piece of this puzzle. This isn't OpenAI walking into a chip foundry blind. Broadcom has deep expertise in custom ASIC design, application-specific integrated circuits, and has already helped Google build its tensor processing units, the very chips that power much of Google's AI infrastructure internally. That precedent matters enormously. Google's TPUs have allowed the company to reduce its dependence on Nvidia meaningfully, and OpenAI appears to be studying that playbook very carefully. Now here's where the analysis gets genuinely interesting. Should Nvidia investors be worried? The honest answer is yes and no, and that complexity deserves respect. In the near term, Nvidia's position remains extraordinarily strong. The H100 GPU is still the gold standard for AI training at scale, and custom chips take years, sometimes half a decade, to design, test, validate, and deploy at production scale. OpenAI is not going to flip a switch and replace its Nvidia infrastructure overnight. The demand for Nvidia's chips across the broader AI ecosystem, from cloud providers to startups to enterprise deployments, is still accelerating at a pace that custom silicon simply cannot displace quickly. But here's the longer view, and this is where thoughtful investors should sharpen their attention. The trend line is unmistakable. Amazon has Trainium. Google has TPUs. Microsoft is developing its own AI chip called Maya. And now OpenAI, arguably the world's most prominent AI company, is joining this custom silicon movement. When the most powerful and best resourced players in your customer base all independently decide to build alternatives to your product, that is not a coincidence. That is a structural signal about where the market is heading. Nvidia's CEO Jensen Huang has acknowledged this reality publicly, arguing that custom chips serve narrow, specific tasks while Nvidia's programmable GPUs offer universal flexibility across all AI workloads. There's truth in that argument. Custom ASICs excel at inference-running models but often struggle with the flexibility needed for rapidly evolving training architectures. Nvidia's CUDA software ecosystem, built over nearly 2 decades, remains a formidable moat that isn't easily replicated. Yet even moats can be eroded, slowly, then suddenly. The OpenAI and Broadcom partnership is another shovel of soil removed from that moat's edge. It signals that the AI hardware market is maturing, diversifying, and fragmenting, which historically means pricing power for incumbents begins to compress over time. So the real question isn't whether Nvidia survives this challenge. They almost certainly will, for now. The deeper question is whether Nvidia's current valuation, priced for a monopoly-level future, adequately accounts for a world where its most powerful customers are quietly, deliberately, building their way out.